Morning, everybody. This is Brian Caprice, and I'm going to be hosting our Monday morning market breakdown today. I am one of the founders of Major League Forex. Let me jump through the slides. I know some of you probably were here last week. Oops, there we go. I'll catch you guys up real quick, and we'll jump in. Hopefully today we can get out a little bit faster. I went a little bit over what I was targeting for last week. But I'm an instructor over at Major League Trading and co-founder of Major League Forex, and I've been trading since about 2000. I've created a couple different binary courses, but kind of at my roots, I've always been a currency trader. So today I'm going to focus primarily on currencies and different ways that we can trade them using Nadex. Do a lot of different things. Super busy guy. That's why I created programs called the 30-minute trader as well as the 5-minute binary course over at Major League Forex. And one of my kind of biggest things that I focus on is kind of preparation and preparing for my week. And that's why I was honored to be able to kind of share things that I'm looking for and potential setups that I'm going into Monday morning looking at. Now, this Monday is a very select situation. We do have news this morning at 8:30, so I'm going to give you guys some information on that and potential areas for what we're looking for. But before I do that, let me jump in and go through the risk disclaimer. So trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility, and past performance is not necessarily indicative of future results. Now, Nadex contracts are based on the underlying asset classes, including Forex, stock index futures, commodities, and economic events. And trading can be volatile, although we like that. And investors risk losing their investment at any given time. However, and very important, however, is the design of Nadex contracts ensures investors cannot lose more than the cost of the entry of the transaction. Now, Nadex is subject to U.S. regulatory oversight by the CFTC. And again, that last paragraph is probably the most important of the disclaimer. Just make sure you understand those things. Now, with that being said, let's go through our top three. Now, last week, if you guys were here, I talked about 3 different trades. There was the U.S. We had basically the U.S. non-farm payroll, and that had about an 80 pip move off of it. Number 2, we had more U.S. data, and that was about a 50 pip spike from there that we had talked about. And number 3 was the Aussie news, and that was about an 85 pip move. So last week, the 3 that we picked out as being the major market movers, they worked out pretty well. They were all tradable with binaries, and actually the Aussie, there was actually some spreads you could have traded on that as well. Pretty exciting. Now, this week is interesting. Actually, you know what? That should not be the 12th on the top one. That should be the 11th. That one actually should be today. You know what? Actually, no, I didn't. I actually listed that one as a little bit higher. So just FYI, I'll show you in a second. There is news in about an hour from now. But tomorrow morning at 8:30 a.m. Eastern time, we have CPI, which is pretty much a mover most times. I'll show it to you in a chart, but the previous was 0.0, and they're expecting a jump. Whenever you hear inflation, that goes directly back to interest rates, and you guys know as soon as you mention interest rates, all the market bears jump in and they want to throw the market down, and the currency guys jump in because higher interest rates are better for currencies. Number 2 on Tuesday is Brexit. Now, if you guys don't know what Brexit is, look it up. Brexit is probably one of the biggest movers that we've had in the last 5 to 10 years. It is sent to pound all over the place, and we're supposed to have a tentative vote tomorrow. So we don't necessarily have a time of when we'll have that information in, but it is, the previous was a rejection, and they don't give a forecast on it this time. So this is kind of a big one, and I'll go over on the chart and show you where this one could potentially move to. But just start thinking ahead of time. This could be something that you take a weekly trade on, just because we don't know the timing of it. So giving yourself a kind of 24-hour window as far as using a binary or a spread is a little bit difficult, because again, it could pop at any time, and there can be some post rejection or post acceptance speeches afterwards. And again, that it could, the pound is going to be probably the biggest mover of the week. And then on Wednesday at 7:30, you know what? I forgot to change it. I'm sorry. 7:30, we have core durable goods, and that would be at 8:30 in the morning as well. So it's not this time. I'll show you in a chart in a second, but that's going to be 8:30 in the morning. Durable goods and PPI is always a good one as well. Those numbers are forecast to be more similar to what they were before, but we should get at least a 40 or 50 pip move out of those, which is an ideal range if you're going to be trading binaries. Okay. So with that being said, let me go back and pull up. Let's see, where is it? Right over here. All right. So this is on IG, Daily FX. If you guys are not familiar with Daily FX, you go to the top, you go across to Economic Calendar, and I do some filtering. If you guys remember, I filter out Mexican peso. I don't need that one, but I do leave China in. I get rid of low, and then I click on the weekly view. Okay, and the weekly view will just give us a little bit easier sense to kind of scroll down. And as you can see, right, we have U.S. retail sales. Okay, that's coming up, and again, the high one is considered the advanced retail sales, not the gas and all the other ones. And then again, Powell is already, Powell's speaking throughout the day, so that one's going to be a little. Actually, I guess I'm sorry, he's speaking tonight. But again, that's not a news release we can trade because yes, he starts at a particular time, but whenever he says something is where the markets could move. So big one for the day is going to be this one right here, the retail sales at 8:30 a.m. Now on Tuesday, we mentioned this as well. Tuesday, you'll see that the pound has a lot of news, right? But nobody cares about visible trade balances or industrial production or manufacturing. They're all waiting for that Brexit vote on Tuesday. Okay, that is going to be the big one. You'll see we do have some U.S. news in the morning, consumer price, and again, that was marked off. Typically, U.S. Consumer price index, that's also worth about 50 to 60 pips if we have a miss. Now, the forecast is expected to be very similar to what the previous was. Okay, whenever you see things like that, if there is a miss, that's what will cause things to move. But again, that one is, not. I would say the margin of error on that one is not as high. Okay, going into Wednesday, you guys will see here's the durable goods order. Again, this one, it's, they don't put the previous as often. This is also a good one. And on Wednesdays, we also have, you won't be able to see it here, but you'll be able to see it on some other things. It's considered a lower base news release, but it, you typically have oil on Wednesdays, right? Crude oil inventories happen at 10:30 a.m. So that kind of gets lumped in here as well. Particularly because once you start talking inflation, people start talking about gas costs and, what's it doing? And, oil's been, pretty active the last couple months here. So that could be something you add in here as well as a potential news release. Now, the way you would play that one, I know oil is not up here, so I won't cover it again today, but the way that you would cover oil would be through the dollar CAD. That's its proxy pair in currencies, and you can trade that with Nadex. You could also look in the commodities. There are oil contracts in both spreads and binaries that you could trade on Wednesday as well, but I'm going to try to keep today to Forex, but just, make a mental note of that and write that down. Thursday, not really a whole lot of news, right? A lot of mediums, and we'll get a little bit of movement, but this is typically a day that, we have one day that's, typically a reset day. Not a lot of movement. This would be the day this week I'd pick. Now, again, initial jobless claims and continuing claims, that's kind of borderline. That can be considered something that will move the market because people will be worried about, oh, we're going to go into a recession. It's been forever, or we're waiting for a pullback. Again, you will get a miss on the initial jobless claims. That's very, very common. So that can throw the indices particularly into kind of a little bit of whirl there. And then Friday, again, you have University of Michigan consumer sentiment. I didn't mark that off, but again, that is another one that is, you could probably get, 50, 60 pips on that one if we get a miss. And when I say miss, we have what our projection is going to be if the projection is off. Like, if the projection was 95.6 and it came in at 93.8, that there you see some movement in the markets for that one. And a lot of this will be probably indice based as well, not as much currency, but you will see a little bit. So again, you would trade that through the dollar yen. With that being said, now let's go back and we will jump into the actual currency pairs here. Let me start from the top, and I'm only going to cover the currency pairs that we can get on Nadex. So we will start off with the Aussie yen. We'll let that load. And if you guys have questions, you guys are more than welcome to type them in. It may take a sec for me to kind of see them on the other screen, but any questions that you guys have, I will look over and try to answer them early on this time. Actually, and when I say that, there is a question in there. Let me see if I can pull this across. Yeah, you should see. Yeah, dollar pound or dollar yen should be interesting right now. You lose your shirt. Yeah, Brexit. Well, Brexit hasn't happened yet, David. Yeah, it's one of those things that just won't die, right? All right. So last week I mentioned on the daily, guys, we had this area that we would call a wick over wick. It's a very big selling area. They're kind of hidden areas that support and resistance traders don't have the ability to trade because they can't see them. They can try, but it kind of makes, it's not very, very clear. And typically when things aren't clear in the markets, you have a harder time trading them. We had some great movement. Again, we're bouncing off of it. We talked last week, you go 7 days back. We talked about that we had kind of gap below this area and we were pushing low, and we wanted to see if we could break this kind of bluish area. And that's what we did. You guys will see price came across, right? This is a 4 hour. This is from last week here. And price really it collapsed. And it's in that area right now. So as far as looking for trades, this should be, let me change this a 60-minute for you guys. All right. Right now, for this one, we're kind of in a holding period. Now, with the U.S. news, a lot of times when there's U.S. news, people will trade the yen pairs because it does affect the stock market, which again will move the yen. That's kind of its proxy. But right now, we're in an area that you guys can see there's buyers right here. All right, we've seen price kind of slam down very, very hard, very fast, on a 4-hour, and is run into this area. So, you can see, price gapped all the way down here. Okay, so what we're looking for a price to do now is kind of rally its way back up to where it hit on Friday. Okay, a lot of times that's what you see. You'll see this gap and you'll see kind of a slow kind of grind back, just the way that this candle was formed. So for me, I'm actually looking at longs this week. Anytime anybody mentions gold this week, I'm looking at this pair, particularly with the news. Any Aussie news, again, I don't have that listed this week as major, but there is Aussie news that you can look for this week. Okay, particularly, let's see, this week. I'm just looking over real quick. You have a little bit of news tomorrow. Early, well, I guess it's tentative, so it's just a kind of a regular news release. I'm trying to think I'm just scrolling through real quick. I'm looking for like the best opportunity this week for this one to continue. It's most likely going to grind. Just looking at it right now, because there's not a lot of early stuff. Probably tomorrow is the best chance for this to continue to push higher. Look for a couple pullbacks. I mean, you guys can see it: impulse correction, impulse correction, impulse correction. So again, it's grinding its way back up again. If price does get back up into the 78.84, though, I would be looking to short. A lot of times that is a takeoff point, a previous area if buyers become sellers, especially when there's a gap. So keep track of that one. Aussie dollar, same thing. This pair will be affected more because of U.S. based news, because it is linked. You can see last week I've had this marked off for a while. We had this big area, right? This really, really crazy candle, huge area, and we actually pushed into that on Friday, or actually I guess Thursday of last week. So we are holding. I'm not ready to sell it yet. Again, we need to get closes below the low here. This could be something though if you wanted to take, look more towards the weekly. This wouldn't be a bad trade to take on the weekly. Now it is kind of what I would call a near-term channel. You guys see the top here? We've had 3 kind of bumps off the top, and again, this was the low that we pushed down to. So the more times we push higher, the more kind of, I guess, the less orders that are going to exist that are able to push us back down again. But again, channels are very powerful. A lot of people will take tops and bottoms, and even though this didn't go as low, again, this was based off of a gap. Again, not surprising. It's the weekend. We could look for something to kind of fall back down again. We're looking at, it's about 45 pips, so there are strikes. Let me go across real quick. Hold on. Let's see. Yeah, you're looking at basically 20 pip strike differences on that one. So there's a couple of them that are out there that aren't bad. There's one for 7 hours down. That's what are we looking at here? Yeah, there's some nice ones. If you guys, if you guys have your chart up, looking at the 70-20 and the 70 flat across. Those are interesting positions because they're only about 40 pips from where we are right now. With 7 hours to go, an ATR of 20. Okay, that's basically, it needs to cover, basically 2 ATRs to the downside. With U.S. news, there could be a quick spike on those. So if you're accustomed to trading news using binaries, that could be definitely a setup that you're looking at. I didn't list it as one of the top 3, but it's definitely a pair that could get the markets moving first thing on Monday morning. Overall, again, weekly, I'm looking at this more to the downside once I have confirmation. If we do get a flip, again, look for your weekly binaries to the downside. There could definitely be some movement kind of taking this piece over. You're not going to cover this ground without one of these kind of candles, which doesn't happen ever. But again, you could be taking a longer term kind of swing position. So look for weeklies on this. Let's see, what do we got next? Go down to Euro Pound. So Euro Pound will be a mover this week. With Brexit, anything, you're going to see movement. These are trades I had marked off with some of my mentor students, just areas to the top side. This one is very, very hard to talk about because Brexit could literally move this thing 150 pips to 200. Normally, I'll tell you guys, when there's any type of news release, you can plan on a movement of anywhere between, I'd say, 40 and 60% of what its daily ATR is. Well, this daily ATR is 64. Okay. Brexit candles will look like this. It will be huge, huge movement. It will probably also change the trend. Makes it a little bit more difficult. Normally, I'll go back and I'll look at 4-hour charts. Look for good areas where we've seen buyers and sellers, in the past. In this case, probably up into this 88.20 range is what we're looking at. Normally I'd be picking intermediary areas to look for positive flips. But again, that's only 160 pips away. It's 3 times the daily ATR, but 160 pips is not uncommon, particularly for something as large as Brexit. This one is, I would absolutely, without a doubt, trade this in Nadex, not in currencies, just because the spreads are going to widen. And again, you don't want to get caught in something like that where you're getting taken out of a trade because the spreads are widening, versus a Nadex trade where you can't necessarily get whipped out, right? Whatever your cost of entry in purchasing or selling a binary is the maximum you can lose. So it could spike all the way up here, way above your strike, and then crash back down, and you can become profitable. So it kind of gives you a bit of an advantage over just a traditional stop loss in that sense. And again, that's inherent with most options when you're buying them. But with Nadex, because of the binary action, you're covered because of that. Whatever you buy, whatever you pay to get in, that's the maximum you can lose, no matter what the spike is. So this is definitely set up for binary. Now, I most likely would not trade it. I wouldn't probably trade it with the euro pound. I would most likely trade that on the pound dollar. I'm sorry, the pound yen. That's going to be a bigger mover. And again, there's more potential for profit when there's bigger movers versus something that's smaller and only moves, on average, 20 pips versus something that moves 60 or 80 pips in the same time frame. So just keep that in mind. So this pair, again, as I mentioned before, I usually use this as a proxy to determine which one I'm going to trade, whether it be the dollar, the euro dollar, or the pound dollar. So again, right now, I would say we're kind of leveled off. We're getting some pound strength off, or some euro strength, some pound weakness right now. So for this morning, I'd be most likely, I'd probably be, again, if I was going a dollar weakness move, I'd be going with the euro versus the pound on this one. Okay. With that being said, let's jump down and look at the euro yen. Euro yen is not my favorite pair. It used to be a great mover, and again, it was not bad on Thursday, right? We got this large movement down, and then it stopped. You can see a lot of small candles, and this was an area we had of basing right here. Like, I'll take this and I'll move this to help you guys out here. Okay, we had this area of basing, and guess what? That's what we sucked back down to. It pushed back up, it collapsed, and then literally, look at this candle from Friday. It was nothing. You guys can see it here or not. Yeah, see this little candle? And then it went down, came back, and basically opened and closed at the same exact spot. Here's the same thing. We need an area to break. That happened. This is not a pair that I use too often, except if there's European news. And this week, not really a whole lot of European-based news. Yes, the euro will move based off the Brexit vote, but there are better proxies to take it versus using this pair. Let me look real quick at see if there's anything really good euro news. No, not really. This week there's nothing that's really just euro focused. So I would not be most likely looking at this for any news type trades this week. Areas I am looking for though, obviously we have this what we would call a racetrack. You guys can see it was in one day. It's huge, huge movement. You're looking at 175 pips in one day, and it has an ATR of 80. So definitely what we would consider a parabolic candle. And typically when you have these large drops, you don't have much ability to stop any bit of a retrace. These are from mentoring. Let me remove these real quick on you. One thing I will show though is the fact that over here on the hourly, we do have this little area right here, right? Got some basing, okay? But after that's gone, again, we have this area, right, that we have to go with not much movement. And there's about 122 pips at the top side. So there are trades we can trade on this one. Maybe an out of the money weekly would be nice on this one. There's potential for this one for spreads as well. Again, without any news, any catalysts, right now I'm waiting for it to break through this area. For me, it's got to pass this basing of 125.14 to 125.32. I want to see it break out at the top of this. After that, it's got a pretty clean run all the way back up for about 100 pips back up to 126.35. So not bad movement there, especially up to the top side. Again, not a bad pair considering the strikes are, again, 20 pips apart. Those are definitely something that you could grab. Okay, let's jump down and talk euro dollar. So euro dollar, that's loading. Grab a drink. All right, so euro dollar had a very similar move. Obviously, European-based news, right? Price came all the way down. It pushed back up through this level, came back and touched it, and is now pushed higher. So unlike the last one, we don't really have clean basing anywhere on the hourly on this one, but you'll see that price is kind of pushing back up again. So it is about halfway through, so you may not want to take it because this one is farther in the move. But things you can mark off is you can mark the start of this area off, right? You could mark this area. Again, we had very, very large selling right there, right at the 113 area. So with that being said, if price rallies up over the next 2 days or with some news or any spikes, you could use 113 as a trigger to be able to take a position. Basically to do what price did previously. It came across at base and then it exploded to the downside, right? Anytime you have an explosion like that, those are great places, places to place trades. If you guys know how to place alerts on whatever trading software you're using, what I would do is I would set myself an alert probably about here, right? The 112.80 area. Set yourself an alert. As I said, not too much. We are basically only 40 pips below that right now, but have it alert you when price reaches that area, so you can start setting up and looking at your strikes. Okay. Remember, there is a number of different strikes. The euro dollar is the most traded pair in the world. There's again with Nadex, there's a lot of different options to be able to trade this one. I wouldn't just blindly go into a long at this point. Again, it's got a little chip right here. It's got to go through, but wait till you can get the you want to sell it at the top, not halfway through the movement, right? So again, wait till this gets a little bit higher. We are getting conflicting signals as well. We have a downtrend set up on your large time frame and an uptrend set up on your lower time frame. Again, it's doing its pullback. Again, very, very common when you have one large extended range candle. This move was 150 pips top to bottom. And again, it has a 62 pip ATR. If you guys are not using ATR, it's a very helpful indicator just for the fact that it's going to tell you what a pair is supposed to do or should do in a day. When you get something like a double or a triple that, something really happened amazing. News was really, really off. There was something extremely newsworthy, and those are great trade setups for the future when you see those areas where those things take off. So if you're not using it, I definitely recommend adding that to, and again, all programs have ATR kind of based in there as well. So again, I'll be looking for this one. Now, after that, let's see. Now this is the one I've been really excited about. So this is going to be the big one, okay? This will be the big mover from what we see. So where I'm looking at this right now, okay, although we are showing a downtrend setup because we've had, obviously a downtrend, right? It bounced off of this daily zone up top that we talked about last week. Actually, our last meeting was what? On the 4th? So the 4th was right here. So we were literally coming right out of this area, and we talked about this area that we were bouncing off of. I didn't mark this one off because it wasn't one of the top news events. But since last week, we talked about the bounce. This is 384 pips to the downside. Okay, so weeklies in this one were really, really nice. We're right at this little area, although we've broken through it. Where I'm looking for this one to move. All right, so with Brexit, this one has an ATR of about 130. Okay, so it can move 130 pips in just a given day on average. Okay, something like Brexit, this can be a 260, 250 to 280 pip mover with no problem. Yep, ATR is the average true range. Yep. So with that being said, we have a lot of movement, right? That's potential here. Here's 293. So basically, the start of, see this area right here? I'll mark it off for you guys. This is a potential area for Brexit to shoot us. And you think, oh, it's not that far. But again, from where we are right now, that's 237 pips to the downside. Okay, very, very nice movement. Same thing. Again, if we have something that is the market considers pound strength, we are also about 300 pips back from this daily area. So for me, depending on what the Brexit result is, I would look for movement. Really, I would look for it to either rally here or rally back down into this area in one candle. Okay. And when I say one candle, you would see it, on the 4 hour, or even most likely it would take maybe one, at least one on the 4 hour, maybe two on the hourly for the market to digest it. Now again, we're talking about going all the way back up to 147.70, which is basically up in this area, right? 140.70 is right here. Now that's right above this basing area. It's going to be interesting. Most likely it's going to be pretty violent. Like I said, because they're not saying what they expect it to be, there's always a surprise factor. It could be a very kind of soft response, although with something that as big as Brexit, it's never happened before, leaving the European Union, setting up, there's so many different factors into this one, it's kind of crazy. If you're in a position before, any pound related position before Brexit is released, or again, look when the European trading session is, be very cautious. Okay, if you guys are setting stop losses, or you're in profit, just be cautious about your positions. Watch them, because again, the volatility that can occur with something as large as Brexit, it definitely can take you out of a profitable position very, very fast if you're not cautious. And again, caution's the name of the game when you are trading. So for me, that's what I'd be looking at for spikes up top, spikes back down again. And again, you could say, hey, that's pretty broad, Brian. Yeah, sure. You could say it's going to go up or down. But a lot of the times, if you watch the market move before kind of the news release happens, and again, because there is no, this is happening at 8:30 a.m., makes it a little bit more difficult. Watch the market. Typically, you can kind of, you'll hear it. You'll hear them say on the news that we're expecting the results of Brexit in 30 minutes. They're gonna release that's where you start watching it and watch the market. Okay. A lot of times you're able to predict these based off of what the market movement is before the news actually comes out. Okay. I would like to say that nobody actually knows the result of this until, it's said, acceptance or rejection, but that's not actually the case. The news is out early. And a lot of times you can see the market moving ahead of time. So there are ways to kind of look at that. All right. Let's go down and look at pound dollar. Now, pound dollar is really for the people that are a little bit more risk kind of averse. This one moves less. Okay, the ATR, this is only 102 versus 130. And this one is a similar situation, right? This one has pushed back down and went to the very, very top of the daily area. And again, downtrend setup, very similar situation because we've had all these down candles and now price is pushing back up a little bit. Now, this one is not in an area basing. It still has room to run back down to this kind of lower kind of pivot point. We are about 162 pips to that area below. All right, not a bad little area. Which we got from the top. This one is probably going to be 182. So very similar situation where price is now kind of buried itself. About 150, 160 pips from kind of the top selling area to the bottom buying area. And again, the reason I'm telling you guys that is not because that's what the profit potential is. I mean, sure, I guess you could potentially make that if you put it in early, but what I'm telling you for is because you're going to get a spike, up or down, okay, depending on how you play either of these two. And this is more for picking your targets. Okay, where would be the time to get out? Could it go higher? Sure, but most likely it's going to run into the orders that are existing up here, and it's either going to slow and base, or it's going to stop and turn and retrace back down again. Okay, that's why you see these, kind of moving back, this kind of wave back and forth again. It's running into buyers and sellers, and that's what happens at the news. News doesn't cause it to go higher. It would have went higher anyway. It just is the catalyst to make it move faster. But that catalyst, again, runs out it's like a rocket, right? I mean, a rocket uses all its propulsion to get off the first kind of the initial, 20% or 30% of the climb to get that first lift off. And then it gets easy after that. And the rocket gets lighter and lighter and lighter. It's kind of the same thing. The farther it gets away from the kind of the base of the move, the less kind of power it has to continue to push. And eventually it's going to run into an area of buyers or sellers. In this case, I'd probably shorten this and bring it up there. Okay. And vice versa, I would do this on the bottom side as basically kind of the wedge between where this could go, top and bottom. So if you're in a position and you're seeing it set up, again, this is great areas. Look for strikes around 128.40 and look for strikes around 132.60. Okay, those would be the strikes that I'd be looking for potential bounce. Make sure I wouldn't put myself on the other side of one of those, right? Because we've already seen that, it's been pushed back, so just keep track of that. So if they say get out down. Mark, I'm not sure I understand. He said, so if they stay in up, get out down. Well, I'm not sure which pair you're talking about. I can tell you what happened last time. So last time when there was a rejection, the market gave huge pound strength because they believed that the original Brexit deal was bad and they think that they would get a better deal next time, which brought strength back into the pound, which drove this thing straight up in the air. So again, but if you're trading the euro pound, then obviously that's opposite because your base pair and your quote pair are different. So it's kind of one of those, watch the market move. And again, if you're waiting to get into the trade for them to actually tell you what the result is, you're probably going to be a little bit late. The market's already going to bounce because the reaction time is slow based off the market. It's something that you kind of want to watch before you get in, that kind of stuff. All right. Or what's even safer, which I prefer with a lot of my students, is play the retrace. Right? I mean, if it bounces and slams itself up and stops into this area, it was a racetrack, right? I'd be looking to kind of take this and flip it back down again. You probably get something pretty cheap because everybody, right? You get this spikes high. Everyone's like, yes, I want to buy, I want to buy, I want to buy. Okay. Well, that's when then typically goes down, is when everybody wants to buy after a big move in price is when typically the price reverses and flips on you. So again, it's hard to say, hard to say what you're going to do. And again, I don't think, they don't know what they're going to do yet, right? We got to wait till we get a little bit closer. All right, with that being said, let's go to US CAD. US CAD, you will definitely be able to trade this week. I don't think it's as heavy of a CAD week. No, there's some CAD news on Thursday. There's a little bit of manufacturing data for CAD on Friday. And that's basically it. Everything else is going to be US based, although you're going to have oil inventories as well. You know, CAD finally broke higher and it's kind of pushing, right? And you guys can see, I mean, a gap, it went up, pulled back, went up, and you just really haven't got an entry into this position. And we're getting conflicting signals. You know, we have sideways with upward movement right now. We have downtrend confirmed. We have downtrend confirmed. You know, you got a lot of, you know, this thing has been powerful, right? I had this area I was waiting for it to come back down to touch to go higher, but it just kept going. It didn't come back to retrace on me. I mean, big things I'd mark off on this one on the daily. I mean, pretty easy, right? If you guys aren't marking these off in your charts, you should be. There's the top of your range, and here's the bottom of your range. Okay, we are smack dead in the middle right now. You know, get an idea of direction. You know, it's doing the same thing that we saw on the Aussie pair. You know, very strong gap, right? And it's trying to pull back and fill that gap. This one only has, let's see, you're only talking about 50 pips left to go on this one. But if, you know, there's US data today and that data is not good in 30 minutes from now, again, this could spike back down and hit this gap area. But that wouldn't be a bad place for a buy either. It's not really running in anything on the daily, so I'm not really quite ready yet for a confirmation trade to the downside. But again, it's not, you know, maybe the news in 30 minutes will be really, really bad. I don't know. Again, can't predict what's going to happen. I don't have a crystal ball. I can only trade with what I see in the charts. Okay. But right now, I will say that gap areas, particularly where they initiate, like this area right here, is an area of buyers. Okay. So even if price goes down, I'd be looking most likely to buy and go up. It would take some really, really, really powerful news to not only break this area, but break this area to start pushing back down again. I would mark off this. Okay. This is a pretty big move. Kind of that area right there. If price is able to enter, again, see these big extended range candles. Again, I'm very big on watching for parabolic candles. It's 122 pips, and on this time frame, the ATR is only 31. So it was 4 times what you would see on average. And in fact, the daily ATR is only 80. And, you know, again, we're at 122. So we are well and above what our daily ATR is. Those are areas that don't typically provide a lot of resistance. So, you know, when price is pushing through them. So again, mark that off in a potential downside. And the way I would trade this one, guys, if it comes down and breaks this gap from Friday, if it goes below, I'm looking to short when it comes up and touches this area to go lower. Okay. There's a number of different ways you can do this with a spread. You can do the binary. It is Monday, so you guys can definitely touch the touch point, you know, the touch brackets as well. I don't know if any of you guys trading currently right now the touch brackets. If you want to just type it in with a question or poll, I didn't set it for poll, but in the chat area, you guys can put that in there. All right, Mark, you're doing touch brackets. Okay, good. Now remember, you cannot trade this one in a touch bracket, but you could do like the pound dollar, or I'm sorry, the dollar yen in a touch bracket, or actually we didn't talk about it, but you could do the pound dollar as well in a touch bracket if you guys aren't looking at them. Like I said, looks like a couple people are trading touch brackets. 1 or 2 no. Brexit, actually, this would be kind of a good idea for you because we're going to get so much movement and you can learn how it works. Open up your demo side of Nadex and place a touch bracket on the pound dollar in demo mode. Okay, with as much movement as there is predicted, most likely it will hit the other side of the touch bracket, close you down, and you'll be able to see what the kind of new touch brackets look like, right, when they get rewritten. That's a great learning experience. All right, with that being said, let me jump down. Dollar Swiss. Typically, I'm not a big dollar Swiss trader. You'll occasionally get a bump, but then you just get like so much basing for me. It's not, you know, like I said, we had all this basing here. I was just so bored with it. We had this kind of, if we broke below this area, again, it literally spiked down in one candle and then stopped and then based again. So, you know, for me, it was kind of this was a quick one. Same thing. It's kind of pushing back down to the, here's the gap, right? And now we're just basing. Again, this is a geopolitical based pair. And again, anything with North Korea or China, those are basically the big movers on this one. You won't, even when it's US-based news, you don't see as much of a movement. It's very blunted on this one. There are better pairs. This one only has an ATR of 50 in a day, so much smaller pair. And again, like I said, you get a lot of this basing, and then boom, you get a pop suddenly. It's a little bit harder for you. I mean, even here, right? It just went up, down, but really didn't move from this kind of this area. Not a big fan, so we'll jump ahead. We'll go down to the last pair, dollar yen. Dollar yen will be tradable all week. The dollar yen is one of those weird pairs. has a 55 pip ATR on it, so it doesn't move huge for the day. But you guys will see this is the area we marked off last week. We said if we get a break below, right? We had so much movement up. Look for a break below. We did. We got the break below. It may or may not have gotten stopped out here. I probably would have moved my stop loss up to here based off of this entry. I'd printed it here. But again, completed all the way down. Ended up on Thursday. And where we are right now too, we are actually down in this buying area. We have kind of bounced off of this little piece right here. Let me mark it for you guys. Right there. Okay, that's what we bounced off of. And again, we always want to take our profit before a bounce area. The news in 25 minutes will be kind of telling. If we pop, most likely we're going to pop up in this 111.50 area, about 40 pips from where we are, or vice versa. I think we'll kind of drive back down again, and we may make an attempt to break through this zone. And again, same way I trade, just like I trade the other one. If it breaks through, comes back up, I'd enter and go south. Okay. All right, so that is it as far as the Nadex-based currency pairs. A little bit long, 5 minutes. I'll make sure I will get it next time. So with that being said, guys, anything else I can help you guys with, please go over to the website, MajorLeagueForex.com. This is what it looks like. Go down and see this button for Discord. Go ahead and join Discord if you guys are already on there. It's a chat program we use with our students. It's free. It doesn't cost anything to join. Here's my Discord tag if you have other questions, or you can always email me at support@MajorLeagueTrading.com. Any other questions with Nadex-specific entries or exits or anything like that, just go ahead and shoot Nadex customer support. They are excellent over there. They will help walk you through things, as well as the education section on the Nadex website is wonderful as well if you haven't checked it out. Definitely recommend you guys, though, go check out the touch brackets this week. With Brexit, you'll get movement. It's a great way for you guys to test in demo mode the pound dollar touch bracket. All right. So with that said, let me cover any questions that we have. Let's see. Yes, no.